let's back up. Let's have a quick conversation on what's going on here on this chart and why this is one of the most important charts of our decade. Okay, and I want you guys to understand what's happening. They placed a bet based on what the Fed told them. It's not like they gambled that Microsoft would be worth $1 trillion or something. Like they asked the Fed gave them guidance, they placed a bet accordingly, and then the Fed did a different thing and it totally rugged them. So, you know, you zoom out and you kind of look at all this stuff and I'm like, this is pretty worrying across the board. All right, so who is Balaji? Who is this guy? Well, he's got, you know, good amount of followers. He's definitely somebody. Well, here's a quick rundown on him. Obviously, do your own research, check this stuff out yourself. But he is a guy that I have followed for years. I'll give you my take on him, not like what Wikipedia would say. So obviously, he's an entrepreneur, a VC. Some people that I respect dearly, whose opinions I respect dearly, they have been on the stream before, and they're now publicly saying Balaji is just a shill. He's a VC shill, and now he sees that his casino coins are going down in value, and so now he's doing this marketing thing. Okay, so just understand there's it's not just like a one-sided, oh, he's only a good guy. Like there's lots of different people's opinions on it. I'll tell you what my takeaway is. Balaji is somebody that I've followed since, let's say, 2018 to 2019. He caught my attention when he was talking about some macro market things, not related to Bitcoin, completely unrelated to Bitcoin. So some of the things he's discussed that I followed him is he's had these conversations that, hey, I think in the future that geographic boundaries, so like around, I live in Texas, so like the boundary around Texas or the boundary around the US or on and on, that these are going to be less important than the new digital frontier. So remember, this is back in 2018. This is before, you know, COVID hit and a lot of people went remote and all this. But he was saying like, look, I think there will be this pendulum shift from in-person working to online working. It just makes sense. The cost benefit is there. And at that point, there'll be more people working for a company or something in another country. And then where might that lead? So he does these kind of like thought games. He's like, he can see the pieces of the puzzle and he can kind of loosely see how they'll fit together in the future. One of the things that he also said that really caught my eye is this is January of 2020. So he's talking about coronavirus and how this is a pandemic and what will likely happen. So remember, this is before COVID is announced because it wasn't until February or March of 2020 that COVID was really a big deal. So from December to say December of 2019 into January of 2020, this guy was talking about like, hey, number one, this is a big deal. And here's the data to support that. He went all over it. And then he was like, number two, here's where it's going to take us. And he goes through all this stuff. Border closures, nationalism, social isolation, increase in trends of prepping, remote work, face masks, and distrust in government. So how many check marks do you think you could give this guy for this? Now, some of this stuff you could be like, oh, whatever. Okay, social isolation. Okay, we're all sick. Yeah, big guess, right? Nobody was talking about border closures early on. In fact, if you remember, whenever Trump started talking about that, it was like, hey, you dirty racist. Why are you even? So this was very much counter public narrative at the time. Okay. So this is very interesting. So going forward from there, I've kept my eye on him because he doesn't miss on big, like when he takes a stand, it's kind of like not to equate myself too much, but it's like there's times when I'll take a stand to what I see on the charts and I kind of like ride or die, and that's the hill I die on. And sometimes it doesn't always work out, but a lot of times it does. And that's kind of where I put this guy when he makes these big kind of public, you know, bets or like announcements or whatever. And that brings us to March 17th, 2023. He says, now I'm skipping a couple things, but I'm going right to the meat of this thing. I will take that bet. He's referring to what this guy's saying right here, that I'll bet anyone $1 million that the US does not go into hyperinflation. He says, you buy a Bitcoin, I'll send you $1 million. This is a 40-to-1 odds bet. The term is 90 days. All we need is a custodian, blah, blah, blah. And so what he's saying is that I bet you that within 90 days, Balaji is saying this, within 90 days, Bitcoin will be worth more than $1 million. He goes on to kind of clarify this, but not until he spends time going through the current system, the current banking system, the current macroeconomic, what's going on. This is a great one. unrealized gains or losses on investment securities. So these are, whenever the Fed, let's back up. Let's have a quick conversation on what's going on here on this chart and why this is one of the most important charts of our decade. Okay, and I want you guys to understand what's happening here. So the source of this is the FDIC, the guys that monitor or that will guarantee your funds at the bank, at your local Wells Fargo or whatever. If you have up to $250,000, these guys will reimburse you. So they keep tabs on banks just to kind of like monitor the health of the system. So let's have a quick conversation on what's going on here. Why do we care about investment securities of banks? So, well, this is important. Let's say you're a bank and you get in $200, just you're a small bank, $200 in deposits from your customers. Well, how do you make money with those $200? You lend out some of it, let's say $100 of it to loans. You give out loans. Now, that other $100, you got to do something with it. You could either give it to more loans, or what a lot of people do is put it in securities. How do you decide what securities to put it into? Well, you're a bank. You're not like trying to be risky, but you want to be smart. So you ask the Fed, hey, what are you guys going to do with interest rates? Give me guidance. You guys tell me, what are you doing with interest rates? The Fed responds, right? They put out some information roughly every month or every quarter. And the banks will say, oh, okay, they said they're not going to raise interest rates. So let's place some small bets that interest rates won't go up very high. The people that decide these things told us that, so let's do it. What has happened? Well, that's literally what happened in 2020 and kind of early 2021. Well, what happened? All of a sudden, the Fed raised things 4.5% or more potentially, and everybody who bet on flat or maybe a minimal increase, they're all underwater. All those bets are underwater. And what's worse, remember in our scenario, somebody puts in $200 as deposits, you lend out $100, and then you put $100 into the market. What happens if that deposit guy says, hey, I need all $200 back. I need it all back. Well, you had the loans. You can play some games with the loans. Maybe you sell the loans. You can do whatever. You can get that $100. But that other $100 to give the depositor back, that is in these underwater securities. So if you're going to cash out, you're going to recognize that loss. And that is why this is such a big deal. If there suddenly is some sort of bank run, across the country, then this is telling you that the banks cannot back it. They can't hold on to it. They will not survive it. So this is at kind of the core of what Balaji is saying. He's saying that the banks are broke. Things are bad. Like things are getting worse and worse. He has this secondary tweet where he spends more time going over it. I'm summarizing because we're live and you guys can go through and read it at your leisure. But I want to just point out what he's saying. So he puts more time into this. The banks are insolvent. Here's my data to prove it. He goes back. He kind of does a little bit better job of annotating where he's getting this information. On and on and on. And then what's the very last thing he says? Oh, and by the way, they are trying to block the exits. And he specifically mentions Signature and Silvergate. By the way, that scenario where you take in deposits, you lend out, about half and you put the other half in securities. That is the story of Silicon Valley Bank. That is SVB. That's what happened. They had a certain amount of deposits and it was a lot. They lent out half of it roughly. The other half was in the securities markets. And suddenly there was a bank run, a liquidity crisis. The depositors, just like what happened with Binance, you guys understand what this, you're good with this concept. Whenever there's fractional reserves involved, like with a crypto exchange, people will occasionally pull all their money off just to make sure it's all there so that we don't have another FTX. It's the same thing with like a traditional bank, and the same result can happen potentially. Only in this case, the government can step in. So this is where things get really, really interesting, is they are trying to block the exits. Now, right on the heels of this, we had this really interesting exchange between what I understand is a senator out of Oklahoma and Janet Yellen. So I want us to just take a minute. We'll probably watch about 3 minutes of this clip, but for you guys to really understand, the what's behind what Balaji is saying, and recognize that this happened literally the day that Balaji was speaking. So he's not basing anything off of this. He's seeing the data and reading the room for kind of what he predicts is about to happen. But listen to what the Janet Yellen says and what this question is. Very, very, very interesting.
Start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they?
Okay, so the reason he's asking that is because Janet Yellen, along with the Fed board and everybody else, the FDIC, they said, hey, by the way, everybody who's involved in these banks that just crashed, that are going down, we're going to make all depositors whole. Not if you're 250,000 or below. Literally everybody. You got $100 million there. Don't worry about it. Uncle Sam's got you. So what that means is the bank didn't have the offsetting, assets to pay you out. If you had $100 million and you went there, they lost it in the market. People will use the term gamble, but I don't really see it that way, because they placed a bet based on what the Fed told them. It's not like they gambled that Microsoft would be worth $1 trillion or something. Like, they asked the Fed gave them guidance, they placed a bet accordingly, and then the Fed did a different thing, and it totally rugged them. So now they're having to deal with things. Well, to stop a mass market event, all these institutions, these government agencies said, you know what, we'll eat any of those, we'll make up for that shortfall. Whatever shortfall there is, the depositors will be made whole, basically through printing money. There's no other way to do it but printing money.
Fully recovered. Every bank,
So he's saying, well, so you did that to those guys who mismanaged things or whatever. Are you going to do that for these community banks too? Like the one in my hometown in Oklahoma, I'm speaking for him. This is what he's saying. He's like, well, you did it for big boys. Are you going to do it for the little guys too?
every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
Made that determination.
Right. So
Too quiet?
What is your plan?
Let me turn it up.
Keep large depositors from moving their funds out of community banks?
Okay, so this is the key here. She gave him like a half answer. She said, well, if it's got to, you got to jump through these hoops, and then everyone's got to agree, and then we'll do what we just did for them. And he's saying, whoa, so are you basically giving the green light for everyone to pull their funds from community banks and put them in only with the big boys?
Into the big banks. We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening.
But it's
right
happening.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well,
All right, so they she him hauls around, doesn't really give a straight answer. I'll give the link to this if you guys want to watch that yourself. But here's the punchline. The punchline is they're consolidating where everybody's money is nationally by altering the incentives of the market. They're pushing all of our collective wealth into smaller and smaller and smaller and smaller areas. And when everybody's wealth is under certain silos, and very few by comparison to 10 years ago, it's much, much easier to control things. One other thing worth pointing out is right on the heels of all of this, oh, by the way, there's now this coordinated central bank action to enhance the provision of U.S. dollar liquidity. Don't worry about it. We're just doing this thing that has never been done before, but just for reasons we can't really get into. We're gonna all kind of work together. Every central bank across the world, Bank of Canada, England, Japan, Euro, Fed Reserve, and the Swiss National Bank, and we're all gonna basically connect in a way, link together in a way where there's strong liquidity for the US dollar. Now, all this is going on with the backdrop of chat nailed it with these CBDCs. So there's also in June of this year, there's a new product. What do they call it? Like Fed Wire or something like that. Somebody fact check me on that. But there's a new product that's basically the US's version of a CBDC. And if you don't know what that is, it's time to do a little Fed Now. That's what it is. Fed Now. It's time to do a little bit of homework, because this is the kind of thing where imagine getting money from the government that has a time limit. You have to spend it or it just poof disappears. Imagine getting money from the government that they can say it is okay if you spend it here, but not okay if you spend it there. And kind of weird too, how a headline yesterday or the day before was that, you know, the party, the leader of the party that's in opposition of those in power right now, the you know, presumed leader of the opposition power is probably going to get arrested in the next few days. So, you know, you zoom out and you kind of look at all this stuff and I'm like, this is pretty worrying across the board. There's a lot going on here. So coming back full circle here, Balaji is saying, look, there's a lot of things going on. The biggest issues are the banks are likely insolvent and probably going to pop. And so he is saying, based on his research he's done on hyperinflation events, he goes back and he talks about hyperinflation works very, very, very fast. Historically speaking, like time required for prices to double in Hungary, it was 15 hours. In Zimbabwe, it's 24 hours. So he kind of goes through this stuff and he's saying, no, we will, within 90 days, that will be the US. So how wild is that? You guys, you got to make your own opinion. I like I've tweeted out, look, I'm bullish Bitcoin. Don't get me wrong. I believe in cycles and this and that, but I'm not willing to put down like my entire net worth to say that in 90 days, we're going to be over $1 million. There's no shot. Like there's no way I would ever make that bet, but this guy is. So yeah, life comes at you fast. We're going to find out, man. We're going to find out. I don't know that it's fair to say he doesn't understand the banking system. This guy's very bright. He is a tech bro, but he's very bright and he knows how to read graphs. And I'm not saying that in a way where I'm like, therefore he's right. I'm just saying, don't be very quick. Don't just quickly dismiss like, nah, he's an idiot. Could it be grift? Okay, maybe. Could it be like he's trying to get, you know, almost like Michael Saylor, like perhaps he's trying to draw attention like Michael Saylor, and then poof, like Corey with Swan was talking about this today. He said, I bet Balaji's going to start like a Bitcoin podcast. And basically this is $1 million in marketing or $2 million in marketing for his new Bitcoin podcast. So that's fine. All that is fine. Like if you think he's got kind of perverse incentives going on, he's doing this for bad reasons. All those are fine things to think and dig into. But I don't think something that's reasonable is like, oh, he's a fool and he doesn't know what he's doing. Like, this guy has called more macro events to a T than anybody I know. So I don't know. I don't know. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.